Good afternoon, everyone, and welcome to today's Academy Finance Professionals Power Hour. Today, we're delighted to welcome colleagues from HMRC. We have Kerry-Ann, who will be delivering a presentation on employer duties, and Matthew, who will be speaking about employment status. Really grateful to have them on board with us. These are two of the topics that you told us you would like some extra help with. I'll just run through some housekeeping before we hand over, and then we'll make a start. So the session is being recorded, and the recording and the slides will be shared after the event. If you have any questions at all during the Power Hour, just use the chat box function. And if you see a question that resonates with you, just use the upvote button to like that question. If there's any duplicate questions, we may not publish them, but and we can't publish any that are specific to an Academy Trust. We can only answer questions today that are related to the presentations that you're going to be hearing about. So there will be a chance to give us some feedback and tell us how we did a bit later. So have your mobiles to hand and get ready to scan the QR code a bit later. So I'm just going to hand over now to Kerry-Ann.
Thanks, Pam, and good afternoon all. Firstly, a thank you to Pam and her colleagues for the invite to come and speak to you all today. My name is Kerry-Ann Jones, and I'm the Employer Duties Risk and Technical Lead within Public Bodies Group. Next slide, please. So this slide then just gives an overview of the topics that we're going to be looking at today. I won't go into any detail at this point, but I do hope you'll get a lot out of the following session. Next slide, please. Let's get into it then. So first of all, Public Bodies Group. For some of you, this might be the first time that you're hearing this phrase when it comes to HMRC. So who are we? What do we do? And how do we do it? We are a specialist business area within HMRC and exclusively deal with government departments, NHS trusts, local authorities, housing associations, higher and further education, police, fire and other miscellaneous bodies. Public Bodies Group provides education and support to our customers, whilst also tackling non-compliance where appropriate. We do this by speaking to our customers on a one-to-one basis, but also through events such as this facilitated by representative bodies and intermediaries. We have tax specialists within Public Bodies Group who can respond to technical queries on VAT, employer duties and corporation tax. Technical queries should be submitted by customers when our guidance or helpline have not provided you with the clarity you require and there is technical uncertainty. Speaking specifically then about employer duties, we have tax specialists across the UK who deal with all aspects of employer duties, including pay-as-you-earn tax, national insurance contributions, expenses and benefits, and the construction industry scheme. Our tax specialists deal with both the technical queries submitted and the compliance activity to ensure that our customers are paying the correct amount of tax at the right time. Today, I'm going to talk you through some of those employer duties subjects that might be of a particular interest to you. Given the time we have today, I'll be focusing on the main points of each subject, but just wanted to stress at this point that you as employers should be considering each situation in front of you, the facts of that situation, and how it presents in order to determine the correct tax and national insurance treatment. Next slide, please. Starting first then with club membership. So when we talk about club membership, we could be talking about things such as gym membership, membership to a golf club and so on. If you as an employer provide this as an incentive to your employees, either through reimbursement of the cost or through direct provision, then you may have certain tax and national insurance obligations. What those obligations are will depend on who arranges the membership and who pays the club. If you arrange and pay for the fees for an employee, you have provided a benefit to that employee, and so you must report the cost on Form P11D and pay Class 1A national insurance on the value of the benefit. If your employee arranges the membership, but then you as the employer pay the fees, you have met your employee's pecuniary liability. And so you should report the cost on Form P11D for the tax to be met by the employee, but deduct and pay Class 1 national insurance, but not pay-as-you-earn tax through the payroll. If your employee pays the fees, but you reimburse them as the employer, this counts as earnings. and you should add the amount to your employee's other earnings and deduct and pay pay-as-you-earn tax and Class 1 national insurance through the payroll. Some employers may offer club membership through a salary sacrifice arrangement. If the cost of the membership fees is less than the amount of the salary given up, you should report the salary amount instead. There is guidance on club membership fees within the Employment Income Manual, and this can be found at EIM 21696. Next slide, please. Moving on to private medical insurance then as our next subject. Many employers meet the cost of employees' medical expenses or arrange for them to be met under an insurance policy. There is guidance within the Employment Income Manual at EIM 01550 that details the tax treatment that applies to the various ways that an employer may do this. One of the most common ways employers will assist their employees with medical expenses would be to provide or contribute to a medical insurance scheme, such as those operated by BUPA. Depending on the type of insurance policy entered into, both the employee and their family may be covered by the insurance. Each individual employee who takes up the incentive of medical insurance is chargeable on the premium paid in respect of them and any members of their family or household. If the employer pays for the insurance premiums directly, this should be reported on a P11D and Class 1A national insurance paid. If an employee claims reimbursement for insurance premiums from the employer, then this is earnings and should be included in the payroll for tax and Class 1 national insurance to be accounted for. Next slide, please. So next then we're going to talk through paid duty meals. If an employer is providing free lunches for their employees, a taxable benefit in kind will arise unless it falls within one of the three circumstances qualifying for an exemption or deduction. These are outlined within the Employment Income Manual at EIM 21670. The three circumstances are on the slide you can see now, but I'm going to talk through the first one in more detail, as I think that this is the one that's most relevant to you as employers. Next slide, please. So Section 317 of ITPA 2003. This states that there is no tax charge on the provision of meals for employees if the meal is provided in a canteen or on the employer's premises, and the following conditions are met. The meal is on a reasonable scale, and all employees or all employees at a particular work location may obtain a free or subsidised meal or a voucher for one. Next slide, please. Section 317 ITPA 2003 continues, and the most relevant part to you as employers on this slide is that the meals are not provided as part of a salary sacrifice or a flexible remuneration arrangement. EIM 21672 within the Employment Income Manual provides further context on this section of ITPA. It explains that there is no requirement that all employees actually do obtain meals. The opportunity for all employees at some time or another to get a free or subsidised meal is enough to meet the terms of the exemption. However, if that opportunity is not open to all the employees, that is, that some employees do not get the opportunity to have a free or subsidised meal, but others do, the exemption does not apply, unless those others are given free or subsidised meal vouchers. Next slide, please. So this slide then details the tax and national insurance treatment when none of the exemptions or deductions apply. The appropriate tax and national insurance treatment will depend on how provision of free meals is being made. If this is direct provision of the meals by the employer, then the relevant amounts should be reported on Form P11D for tax purposes or through payroll where the employer has formally registered to payroll the benefits and Class 1A accounted for. If the cost is reimbursed to the employee, the payment will be subject to tax and liable to Class 1 national insurance through the payroll. Next slide, please. So this is our final topic for today, and this is clothing. I wanted to briefly cover the different types of clothing that you might provide to employees and some aspects of our guidance that you might wish to consider if you do provide this clothing. As I've mentioned previously, though, it's really important that you consider each circumstance individually. Starting with ordinary clothing. This is where clothing does not meet the definition of uniform, protective, or specialist clothing. If clothing of this nature is provided to employees, then the cost to the employer is the value of the benefit to the employee, and that amount should be reported on the P11D for tax purposes or through payroll where the employer has formally registered to payroll the benefit and Class 1A accounted for. If the cost is reimbursed to the employee, the payment will be subject to tax and Class 1 national insurance through the payroll. Moving on to specialist clothing. No charge to tax or national insurance arises where the clothing is of a specialist character dictated by the occupation as a matter of physical necessity. HMRC accepts that specialist clothing can include protective clothing or uniform, which brings us nicely onto our next point on the slide, protective clothing. Protective clothing includes items such as overalls, protective gloves, and boots. No charge to tax or national insurance arises for the cost of genuinely protective clothing that is worn as a matter of physical necessity because of the nature of the job. It is only the protective clothing that this applies to, though. The clothing worn underneath does not qualify unless it is in itself uniform or protective clothing. On to uniforms next then. No charge to tax or national insurance arises for clothing that is recognisably a uniform or part of a uniform where the employee is required to wear it by their duties. It is not enough for the clothing to be uniform in the sense that all employees in the same employment wear clothing of a similar design or colour. Fixing a permanent and conspicuous badge to what would otherwise be ordinary clothing may be enough to make it a uniform, but each case must be considered on its own merits. The essential test is whether the employee would readily be recognised as wearing a uniform by the person in the street. A detachable badge is not sufficient to make the clothing to which it is attached part of a uniform. Moving finally then on to the upkeep and replacement of uniform and protective clothing. If you have determined that the clothing provided is not a benefit to the employee or the reimbursement of any costs is not liable to tax and national insurance, then the reasonable cost of upkeep and any replacement of the clothing will also not give rise to a tax and national insurance charge. That concludes my section of the call today. Thank you all for your time, and I will now hand over to Matthew.
Thanks, Karen. I'm just going to share my screen. Hopefully that should have the presentation on the screen for you. I'll just do a quick introduction. I'm Matthew Newbrook, and I work in HMRC as part of the senior technical team in employment status and intermediaries. So I'm joined in the background by two colleagues of our technical team who will support us by keeping an eye on the chat for question to respond. So we'll put together quite a high level overview of employment status for you. Even though it is quite high level, we hope it's going to be useful, and there'll be space for questions, answers in some form. So put any questions you've got in the chat. We'll come back to what we can, and where we can't, we'll work with the team to provide answers to those questions we haven't answered today. Just remember, though, I think it was mentioned at the beginning, we won't be able to answer any questions on anyone's individual circumstances. So we'll move on to the next slide. So this is just what we're going to cover today. A very brief introduction to what employment status is. Models of engagement. So we'll talk about the different ways that a business can engage workers. And we'll talk about how that affects whose responsibility it is to get the employment status right. The next bit is probably the bit you'll most be interested in. How do you actually go about deciding whether a worker is employed or self-employed? And lastly, we'll point you very briefly to some places where you can get some further help. So that first one, a really quick introduction to employment status. So this might be a really obvious thing to say, but for tax and national insurance purposes, workers can be either self-employed or employed. And why does that matter? So very simply put, if somebody is treated as self-employed, they'll generally pay less tax and national insurance. And conversely, if they're employed, they'll pay more tax and national insurance. And what we want is for people to be treated correctly. We don't want everyone to be treated as self-employed or everyone to be treated as employed. It's not about maximising revenues. We're committed as a department to collecting the right amount of tax at the right time. So if you've got questions about whether a worker should be treated as employed or self-employed, then that's what we're here to help you with. That's what this overview is about, and we'll point out some places towards the end where you can get more help to help you with those decisions. So it's a very brief introduction into employment status and why it matters. And there we'll get that green tick. And you'll be forgiven if you think we've worked with Pixar to get some of the animation for these slides together. But yeah, hopefully they add some entertainment value to what we're talking about. So the next thing we're going to talk about is models of engagement. Boom, there we'll fly through again. So there's various of ways for a business to engage a worker. The most obvious one is direct engagement. So you, as an engagement, just hire the worker, whether they're self-employed or employed at this point isn't the point. We're just talking about how you hire the worker. There's no agency, there's no personal service company or anything like that. Just you as the engager and the worker. Then there's involvements that involve arrangements involved in agencies. So in this scenario, you as an ask an agency for workers, they provide them and they pay for them. Then the agency invoices you and you pay the agency. Note that if the agency just introduces a worker to you and you hire that worker, then that's not really what we're talking about here. That particular scenario will be treated more as a direct engagement for all intents and purposes. And finally, there's the scenarios where you might hire a worker via the PSC or personal service company. There's no legal definition of what a PSC is, but it's essentially a company that a worker uses to provide the services through. So, for example, if I was a self-employed plumber, just going around fixing people's radiators, boilers, taps, doing plumber type activities, to make myself more tax efficient, I might set up a company called Matthew Newbrook Limited and perform all my work through that company. I'm the only worker in the company. It's my personal service company or PSC. And doing things that way means I can legitimately benefit from tax efficiencies through corporation tax and dividends tax, which I couldn't benefit from if I was self-employed as an individual. The problem though comes in when workers who should be treated as employees work through personal service companies. Now, depending on how you engage your workers, you may or may not be responsible for determining their status. So you'll see a column's just flashed in there, column header at the top of the table saying, is the school responsible for determining the worker's employment status for each of these models? I've used school here because of who I'm speaking to on this call, but you can replace it with any type of business or engager. And again, depending on how you engage your workers, you may or not be responsible for paying any arrears of tax and national insurance should it turn out that the employment status was wrong. And so there's a column heading for that, which is again just flashed into view. Is the school responsible for arrears if the employment status turns out to be incorrect? So let's start filling in the blanks. If you directly engage or hire a worker, and that includes that scenario where agencies have simply introduced workers to you, then you are responsible for determining the employment status. They might feel strongly that they should be treated one way or the other. You know, so as a worker, they might say they should be self-employed or employed. But the buck ultimately stops with you as the engager. And if it turns out the status was wrong, you'll be responsible for any arrears of tax and national insurance. Move on to agency. So the agency supplies you with workers. It's going to be that agency's responsibility to correctly determine the worker status. If it's wrong, they'll be responsible for any arrears of tax and national insurance. We'll have a look at the PSC one now, because that is the most complex, because who is responsible depends on the size and business type of the engager. And when I say business type, I'm really meaning, is it a public authority or not? And we're talking about the size and type. We're not talking about the size and type of the PSC here, but the size and type of the engager or the school in this scenario. So in the case of a school that's not a state school and receives no public money and is set up as a small company, it's not responsible for determined status, and it's not responsible for any tax and national insurance arrears in the event that the status turns out to be wrong. Instead, all that responsibility rests entirely with the PSC. Things are different though if the school is a state school or it isn't small. So in other words, it's a medium or large company. In this case, the school is responsible for determining the status of the worker, and that remains true even if there are agencies between the school and the PSC. So imagine your school uses an agency to source workers, and that agency hire a worker via the worker's PSC. The responsibility to correctly determine the worker status still rests with the school. So you might think of it like this, where there's an agency and a PSC in the chain, the PSC rules trump the agency rules. But if the school gets the status wrong, it wouldn't necessarily be responsible for any arrears. So that depends on whether or not the school took reasonable care in determining the status of the workers. So as long as it did take reasonable care, it won't be responsible for any arrears. I'll just move on to the next slide. So I imagine there's probably a few questions on the back of those, on the back of that slide, in particular on the PSC side of things. One of the questions is likely to be what constitutes a public authority. Typically, public authorities include government departments, local authorities, NHS, state schools, police forces, etc. However, not every organisation that receives public money will be classed as a public authority as per the legislation. So, for example, it doesn't cover some charities that receive grants, and also as well as certain private sector organisations that perform public sector functions. So if you're not a public authority, you'll need to consider the size of the business, and we'll look at that on the next slide. So that next consideration is understanding what constitutes as small. So assuming that we are talking about a company, it'll be small if any one of those first three bullets are true. So a company with a turnover of £10.2 million or less is small, even if it's got assets worth more than 5.1 million and has more than 50 employees, 100, etc. Similarly, a company is small if its asset value is £5.1 million or less. Again, it's irrespective of turnover and the number of employees. And finally, out of that bit, a company is small if it only has 50 employees or less. And again, that's irrespective of the other two conditions. It's important to know though that if a company is part of a group, then the entire group is treated as a single company for the test. We add up all its assets and employees, and we take the sum of the turnover of the entire group. And if the group is small, then for the purpose of the PSC rules, each company in it is also small, and the opposite is true. And that's obviously there to stop avoidance of the rules by shifting employees and turnover to different parts of the same group. And then that last bit on the slide, what if a non-state school isn't a company at all? Perhaps it's unlikely, but just run with it for the purpose of the example. What if it's a partnership or a sole proprietor? In the case of an unincorporated entity, it's small if the turnover is 10.2 million or less, and that's the only test in that scenario. You might also have a question about what reasonable care means. So if your school is responsible for determining the status of workers that are being engaged via a PSC, how can you make sure you've taken what we consider to be reasonable care? So I wouldn't say it's rocket science here. The list isn't exhaustive, but we'll put some pretty obvious points and examples on here, some do's and don'ts. So use our guidance, use what's called our assess tool, check employment status tool, which I'll come back to later. You might want to engage some experts in the field. You should make sure that whoever is responsible internally is being properly scaled up, watching presentations such as these. You should also make sure that you revisit the question of status when there are obvious triggers to do it. So like the terms and conditions of an engagement change, or the contract changes, or the day-to-day working practices changed. Once you've made a decision, it doesn't last forever in terms of the status decision if those types of things change. There's also some things that you shouldn't do. Don't make blanket determinations. So in other words, if you've got 10 workers who all do different jobs, don't just decide that the status as one homogenous group. You need to look at each of the 10 roles independently. If they're all actually doing the same thing and engaged on the same basis, then that isn't a problem. Look at it as one role, but otherwise don't fall into that trap. Don't neglect training up internal staff on status issues. And when you're using our assess tool, be careful what you put in. Don't feed it wrong information and then rely on the outcome. And if you subcontract the task of determining the status, don't rely on the outcome without checking it and satisfying yourself it's right. So in other words, you can subcontract the task of getting the employment status, but you can't subcontract the responsibility of getting it right. So with the PSC scenario, where you're responsible because you're not small, or you're a public authority, there are quite a few responsibilities attached to it in addition to determining the status. You have to issue what's called a status determination statement, or an SDS, for each worker. You also have to deal with any disagreements put forward by the workers on their status. And there are also other things to know. We call this area specifically OPW, or off payroll working. We also sometimes refer to as Chapter 10 based on the legislation that covers it. I'm not looking to turn this into a session on OPW, so I'll leave it at that for now. We'll point out at the end where you can get further guidance around off payroll work, and you can also obviously ask questions in the task and the chat, which we'll come back to. So that's covered models of engagement, and we'll wait for that ticket to fly through. There it is. Now we're going to move on to consider how you actually go about determining status. So if this seems a really obvious thing to say, I'll be happy. Employment status isn't a choice. The parties involved don't get to pick whether the role is one of employment or self-employment. It's a question of fact. So the problem is that the law isn't really very clear about what constitutes an employment. So the relevant legislation is found in Income Tax Earning and Pensions Act 03, or ITEPA, as we affectionately refer to it as. It says that employment is any employment under a contract of service, but that doesn't really tell us very much on its own. So for that reason, when we're determining employment status, we're heavily reliant on case law. The courts have addressed what constitutes an employment for our purposes by the accumulation of case law over the years. We've now got a fairly standard approach that we can use to determine whether an engagement qualifies as an employment under a contract of service, which is generally followed by the courts, notwithstanding nuances which are still being ironed out through legislation and litigation to this day. So the approach which has been adopted is known as the ready mix concrete test, and that's named after the court case that produced it. And on the theme of construction, we're going to build a house to help us visualize this test, and this is where the animations really come into their own. So the first step is to determine whether a contract of any kind exists. So this is a necessary foundation before we can test for an employment. We do this by identifying mutuality of obligation, which is sometimes known as MU. So mutuality of obligation refers to the mutual obligation of both the worker to provide and for the engager to pay for them for that work. So worker to provide work and engager to pay them for that work. In simple terms, this exchange creates a contract for which we can then test the employment. There also must be a requirement for the worker to provide the work personally. This is helpfully referred to as personal service. This is as simple as it sounds. The worker must be required to personally perform the service to some degree. So this is where the worker's right to provide a substitute may be considered. So if the worker's got absolute freedom to pay somebody else to do the work instead, they're unlikely to be considered an employee. A partial right to provide a substitute, such as which would have to be approved or agreed by the engager, it's not as strong an argument against employment. So, for example, if we've got a delivery driver who hires someone else to deliver goods and then pays them, and the engager has no say over the hiring of that person, that would go a long way to disproving there is a requirement for personal service. However, if you've got a worker can provide a substitute, but the substitute must be approved by the engager, or it's from a pool of workers, this wouldn't be seen as a genuine substitution. You know, for example, employees can often cover for each other. The next step is to identify any elements of control that exist. So control can be present in what task is done, how tasks are done, and when and where they're done. There's no hard and fast rule, but there must be some element of control present for it to be in employment. But it's not necessary for all four elements to be present. So as everything within these tests, it helps to take a common sense approach. So for example, it's normal for an employee to enjoy some degree of control in the day-to-day work. Likewise, it may be normal for a contractor to meet the client halfway for the purpose of complete the job. I think it's important to note as well that it's the right of control that matters, not the actual exercising of the right, especially when you're dealing with skilled workers. Control from a regulator that a business applies to workers counts as control as well. Other things, working practices, policies, and guidance from engagers are all common methods of controls placed on workers. So once we've established the foundation of our contract and all the essential building blocks of a potential employment, we must then consider other indicators. So these can include how integrated the worker might be with the business and the hierarchy of the company. If the worker isn't integrated with the business, this could be a pointer towards self-employment. The more integrated the worker is, the more this points towards an employment. Whether the worker is in business on their own account, such as having their own suite of customers, their own website, their own commercial dealings, the more the worker appears to be in business on their own account, the more that would point to self-employment. And also the financial risk that the worker undertakes. So in other words, do they have to pay for the equipment necessary to the job? Did they have to invest their own money into their work? Could they make a loss? The more that the risk the finances, the more likely they are to be self-employed. And then there's also more minor factors to consider, like the basis of payment and the intention of the parties. Or do they intend to be self-employed or a worker? Those are the things that you would look at as a more minor factors. So it's quite a quick run through of the most relevant factors we'd expect you to look at and review as part of establishing a worker's employment status. I hope you weren't too wowed by the animations to take it all in, but it's been recorded, so you can go back into it if you were. We've still got a few more to show you. The courts now, when we're looking at advice, that we take a step back and look at the overall picture, considering all those relevant factors to make an overall decision. In most instances, this should be relatively straightforward. Where it's not, there are resources that you can use to help with this, and there's more on that on the next slide. So that's the general test would run to determine if a worker should be employed or self-employed. And there we go. We've got that third green tick. So just like to share some more useful links with you in terms of guidance. So a couple of links on the slide, and we'll look to either share them in the chat or provide them through the team afterwards. That top one, there's more information on an employment status and everything we've talked about today. It's on the employment status manual on the .gov website. It should address any queries that you've got with the ready mix concrete test that was mentioned, as well as more detailed guidance on specific scenarios and the off-payroll working rules as well. We've also have the really helpful check employment status tool, or CEST. So that's the link for it there, the second one down, and I'm going to go show you an example in a moment, but it asks questions about any engagement you like and provides the overall picture. So you can run through hypothetical engagements as well. It's not going to record it. It's not going to say this is made up. You can use it to get a better understanding of the overall picture of any given engagements and which way it might point to in terms of employment or self-employment. The employment status manual as well also contains guidance on how to use CEST, making sure that you're considering all the relevant things when answering a question. And then that third one down is from our Guidance for Compliance suite of products, which are designed to help you consider real world considerations for implementing tax rules. This one covers the OPW rules, or off payroll working, which I mentioned before, and things like preparing for and making status determinations for off-payroll workers. It's specific for off-payroll workers, but there is flowover and crossover for those who aren't captured by OPW. It's got pointers on appropriate record keeping and examples of good systems and processes that you could use for reducing the risk of errors when determining a worker status for tax. So I'm just going to check on time. We've got time. So what I'm going to do is quickly run through a decision on the CESS tool using me to a point as a worker involved. Not everything is directly, but it's there or thereabouts. So we're going to answer it from the perspective of the engager, which would be HMRC in this example, and that's obviously HMRC as an engager rather than the tax authority. So I'll just quickly go through some of them and give it a little bit more explanation of others. So this one, what do you want to find out? So this question should be relatively easy. I'm working directly to HMRC and not via another entity. So I'm either employed or self-employed, and that's what the tool is going to help establish. So selected that second one there. It's asking who are you for a perspective who's answering the question. So we're answering from HMRC's perspective as the hirer or the engager. What job role are you using for the CESS tool? So for this one, the one that most closely relates is public administration under professional services. So this question, does the worker provide their services through a limited company, partnership or unincorporated association? So I think this question is checking whether I've missed the premise from question number one, whether a PSC is being used, whether the off-payroll rules apply. And no, it doesn't. I'm definitely working directly and not through another entity or intermediary. Has the worker already started working for your organisation? Yes, currently in a job. Will the worker be an office holder? So as it's explained in CESS, there's usually positions in an entity like a director, which might be classed as an office holder. There is a link there, and there's in quite a few of the questions where it'll provide links to more information if needed to explain what the question's asking and some guidance around that. So it would link into the employment status manual and the relevant pages. So that link on employment status for office holders link would give more information if needed, if you need some background information as to what office holder was. And the next one that would pop up if we're running through, has the worker ever sent a substitute to do the work? So as I mentioned earlier, and as explained in CESS, a substitute is someone the worker sends in the place to do the role. As you can imagine, like most colleagues, I might cover work or even do a shift swap, but I'm not able to send a substitute off the street to do my job for all sorts of reasons. So that one's definitely a no. Do you? So this would be, does HMRC, does the engager have a right to reject the substitute? Yes, absolutely. Has the worker paid another person to do a significant amount of work? So you can see it's really trying to draw out the elements of potential substitution, and no, I haven't paid anyone to do any of my work. Does your organisation have the right to move the worker from the task they originally agreed to do? And this is yes, HMRC could direct us to different tasks according to my role. Note that while HMRC couldn't easily move us to do something completely unrelated to my job, say fix a lift in the building, there are obviously things that they could tell us to do within my role that I would have to do. HMRC could, for example, tell us to give this presentation, although I was really happy to be invited to do it. But it's a good example of control versus the right of control, whereby in reality the right is not tested by HMRC, because it's not needed. Just doing the job, you're using skill and expertise to establish what's needed, what actions are needed, what activities are needed as a rule. But that right of control for the engager does exist. Does the organisation have the right to decide how the work is done? So this question isn't as straightforward as some of the others because of the real seniority and the level of input from my managers, how I might go about the job. So you'll notice that the CESS questions come with links to our guidance, which I mentioned before in the office holder one. And in this case, it's the link is very handy. So it's just a paragraph there where it makes it really clear as how this type of question can be answered. So that middle paragraph where a hirer does not give instructions all the time, it may be unclear whether they have got the right to decide how the work is done. This may be because there's only one way to do the work or because the worker is trusted and skilled. In these cases, you should consider whether a framework of control exists. For example, does the worker report to somebody who reviews the performance? The important question is whether the hirer could ultimately decide how the work is done if they wanted to. So that right of control. So coming back, it's a yes. Does the organisation have the right to decide working hours? Again, yes. HMRC can obviously give us parameters which will have to work with inside to provide work. You know, in reality, you know, they might be agreed or left to be own decision most of the time, but the engager has the ultimate right to decide or put specific parameters in the contract. Does the organisation have the right to decide where the workers work? Yep. Again, relatively straightforward. Will the worker have to buy equipment before your organisation pays them? So coming into that financial risk element. So if for myself and similar workers, HMRC doesn't require workers to buy any specialist equipment. There aren't any requirements beyond your standard office fare. Will the worker have to fund any vehicle costs before your organisation pays them? So you can see a bit of a theme in terms of the financial risk. Will the worker have to buy materials before your organisation pays them? Will the worker have to fund any other costs before your organisation pays them? So really trying to draw out any potential financial risks there. How will the worker be paid for this work? Drawn on the basis of payment. So for me and obviously many workers, an hourly, daily, or weekly rate is paid. If your organisation was not happy with the work, would the right worker have to put it right? And in my case, yeah, they'd have to fix it in the usual hours at the usual rate of fee. Will you provide the worker with paid for corporate benefits? Put no in this example. Will the worker have any management responsibilities for organisation? Again, put no in this example. How would the worker introduce themselves to your consumers or suppliers? In this one that I work for HMRC, that intention of the parties. Does this contract stop the worker from doing similar work for other organisations? Yes, and we'll just fly through a couple of these. Are there any ownership rights related to this contract? Again, if you're going through this, you have to consider this from your own perspective, your own worker's perspective. But yeah, no. Has the worker had a previous contract with your organisation? Yes or no. Is the current contract the first in a series of contracts agreed with your organisation? This one's a no. Does it allow for the current contract to be extended? No. Will this work take with the majority of the workers' available working time? Yes. Now you can see with some of these questions, there will need to be some interaction, some questions between yourself and the worker. And has the worker done any self-employed work of a similar nature for other clients in the last 12 months? And for me, it's a no. And that's what comes out at the end. So having gone through and answered all those questions, in the vast majority of cases, CES will give you a straight up answer as to the worker's employment status. In this case, you'll not be shocked to learn I'm come out as in it that I'm employed. I think in developing the tool that we really appreciate that our customers, people who use this, want certainty. So HMRC will stand by the answer, and that's HMRC as a tax authority and not HMRC as an employer. Will stand by the answer that CES gives you. That does come with a caveat. As long as we're happy you fed the right answers in, hopefully you'll see that that's a fair caveat. We're not obviously we're not going to stand by an answer that's based on wrong information that's been fed into CES. So it's important that it's used carefully and in line with the guidance links as well. So if you're not sure what the question's asking, please do use the links to the guidance and have a look in the status manual just to get a little bit more background information. And that concludes the overview on employment status. I'm just going to come back and I think I will stop sharing my screen. Thanks, Pam.
Hi, Matthew. Can you hear me okay?
I can, yeah.
Yeah, I'm not quite sure what's gone wrong with my camera today, but yeah, I am here and it looks like it should be switched on, but it's not. We are having quite a few technical issues today, Matthew, so unfortunately we're not going to be able to facilitate the question and answer session. So that actually brings us to the end of the presentations. And I would just like to say a huge thank you to you and Kerry-Ann for 2 very informative and engaging presentations. I'm sure that'll be extremely valuable for the sector. And as I say, huge apologies to all those who had difficulty trying to join today. But these things happen, and hopefully the recording will be helpful and people can watch it back at their leisure. So many thanks, Matthew. Kerry-Ann, thank you.
Thank you.